Good morning, everyone. We are at the beginning of our daily market outlook for Tuesday, 14th of August 2012. Nice and sunny day, at least here in Cyprus. Hope you are all well, and we're going to take a look on today's events and the forecasts, and hopefully we're going to see some more action today compared to yesterday when the calendar was quite empty. Today we have a number of things. Germany already started with its GDP that showed again growth by 0.3% compared to 0.2% forecast, while France remains flat and no movements in the quarterly GDP for the second quarter from the French economy, showing no growth at this point. Anyway, the outlook for most of the Eurozone countries remains bleak, and basically all eyes are now turned towards the German Bundestag meeting on 12th of September, when they will be discussing the approval of the austerity. Yesterday's slap of one of the top German officials to Greece when he said that the Greece should not expect any further money in case they do not follow 100% the austerity plan. So this dispute already exists for a quite good period of time. Greece is awaiting its next tranche of 130 billion euros, but so far there is a strong opposition in Germany, as according to them Greece is not following the previously agreed rules and steps in order to implement the austerity plan. Back to today's events, as said, Germany shows some more improvements, while still full calendar for the day. From Europe, Swiss PPI is just being released. Later on we're going to come with the results with the inflation from UK due at 8:30 GMT, and the forecast is slightly below the previous month release of 2.4%. 2.3% is today's forecast. UK's retail price index is forecasted unchanged at 2.8%, while core inflation is also at expected unchanged at 2.1%. More important is also the German zoo economic sentiment due at 9 o'clock GMT. Still a negative reading seen for today's on today's consensus, minus 19.4, slightly better from the previous release of 19.6, and of course one of the top releases today is the Eurozone's flash second quarter GDP. That is again according to the forecast, and most of indicators expected to show further slowdown in the Eurozone's economy. Minus 0.2% is today's forecast compared to unchanged the previous release. From Eurozone also industrial production due at the same time. Again, negative consensus, minus 0.5% compared to plus 0.6 of the previous release. And Eurozone's zoo economic sentiment, slight improvement, expected minus 19.1 compared to minus 22.3. Moving across the ocean at 12:30 GMT, US retail sales forecasted for a slight improvement. 0.3% is today's forecast compared to minus 0.5% of the previous release, while US PPI is seen at 0.3% higher than the 0.1% of the previous release. And at 14 o'clock GMT, from US business inventories, 0.2% forecast compared to 0.3% of previous release. The currencies remains, especially euro and sterling, remain quite good in the good shape. Let's put it this way. After yesterday's rally of the single currency above 23, psychological barrier holding still above this level, being supported with some news yesterday, and still holding positive near-term tone. From the other side, the larger picture is still showing a bearish structure, bears fully in play, as the euro remains on the larger picture, remains in the downtrend, with some corrective action seen today. and we are looking basically in case of technicals will be only driver. We are looking for an extension up to 123.86, 124.00, as the technical indicators are still pointing higher and looking in showing a quite positive tone. A similar picture is with the sterling that hovers around 5700 after yesterday's brief break above this resistance, with the stronger resistance area seen at 157.20 and the 157.60 zone. Dollar yen remains supported near term, but still within the range, as long as upper boundaries of the range at 78.80 and 79 stay intact. More of this we're going to take a look now in our technical part, as most of you are most likely looking for this to see what are the expectations for today. So as always, we start with the single currency. As we can see, the near-term action of 122.40 last Friday's low extends to 123.72. This was the high of yesterday. This marks slightly above at 61.8% Fibonacci retracement of the latest down leg from 124.41 to 122.40, with the pardon, corrective action seen late yesterday and overnight being contained at our initial support at 123.20. I think this was mentioned in our yesterday's afternoon written analysis that you can find in a number of financial sites. I think I said just like this, 123.20.00 is expected, should actually contain dips along with the 20 days exponential moving average in order to keep this positive structure in play, and actually this actually happened, and the pair was supported at 123.24, where it found a footstep, and the fresh rally is now underway. 123.72 is coming now under pressure, 123.69 seen so far, with the next target 123.86, low high of 9th of August, and 124.00 is round figure resistance. Also the 55 days simple moving average seen on the daily chart, a break of which to refocus our upside targets at 124.40, strong resistance, and double top above which to open way for some more significant recovery of the broader downtrend. The latest leg is from end of February peak at 134.85 that bottomed so far at 120.42. As said at the beginning, the overall picture is still very bearish, and not much to expect unless we see the break above 124.40, 125. That might return focus higher and open 127.40, our next strong static barriers. According to the fundamentals and today's forecasts, not much to be seen in case these will be the indicators will be released in according to the forecasts, as said, a quite negative tone dominates in the Eurozone economies, not just Eurozone but worldwide, but as Eurozone countries are in focus today with a number of economic indicators due to be released, most likely additional pressure would be seen on the single currency in case the releases come at forecasted or even worse levels. Any improvement, of course, would be good support for the single currency in the near-term price action. The sterling asset is also quite well supported in the near-term action, as yesterday's brief break above 157 hit 157.16, and subsequent pullback found support at 156.73, with the ascending 55 days exponential moving average so far maintaining the positive tone, and the studies moving still holding in the positive territory, holding indicators holding above their midlines, keeping the near-term focus higher. Larger picture, however, still sees the pair entrenched within the range, and the upper side being quite well protected by 200 days moving average that currently stands at 157.19, and we have a number of tops range ceiling at 157.66, 76 reinforced by 90 days moving average, offering a quite strong resistance. According to the near-term hourly picture, the positive tone still dominates, and the potential of retesting and revisiting upper boundaries of this strong resistance zone is quite likely at this point. From the other side also, we have to combine the fundamentals that are due to be released today, number of releases with the UK's indicators, as we mentioned at the beginning, are not expected to show any significant changes, rather staying flat, giving some more potential for technicals to drive the pair up towards our next targets and the strong resistance zone. Our focus should be at 157.50, 157.70 zone. In case of a break higher, that would be quite a good signal, as this will establish the new direction of the pair that is so far, despite the bouncing from the year's low at 152.67, being well limited in the past couple of months at 157.70 and standing within the range, but a series of higher lows keep the focus still higher as the pair approaches our next significant barrier. So as said, focus at 157.20, 157.70 zone, break of which to establish a fresh direction. Failure to do this would risk again return to the range trading, with the loss of important near-term support and higher base at 156.56. That is reinforced by ascending 55 days moving average, would delay immediate bulls and allow for deeper reversal, and will basically keep the pair within the previously established range. The dollar-yen's near-term price action is pointing still higher, as the pair rallied so far to 78.59, but larger picture still shows range trading well in play, as the upside remains capped at 78.80 level. Several attempts to clear this zone failed. This is reinforced by 38.2 Fibonacci retracement of the down move from 80.09 to 77.90. We need to see the break pardon, break above this level, and the 79.00 that marks 55 days moving average on the daily chart, in order to signal some stronger corrective action and prevent pair of revisiting a strong support zone at 78.00 and the 77.65 low of 1st of June 2012. On the upside also, as another strong barrier stands in the 79 zone. This is at 200 days moving average at 79.16 currently, and the break above these levels actually is required to improve the short-term picture and the open way towards upper levels, with the 80.00 seen as the next very significant barrier. Failure to clear 78.80 as the pardon, near-term range top would risk further ranging, while loss of 78.15 and 78.00 would be quite risky for further extension lower, as the larger picture still shows the pair in the downtrend of its yearly peak at 84.17, with the daily studies still holding a negative tone and still keeping the downside quite vulnerable, as long as previously mentioned the strong barriers between 78.80 and 79.15 stay intact. The dollar Swiss remains at the back foot following yesterday's loss of important 97.50 support, where the losses accelerated to 97.04. That was our initial target on the downside. 97 as a round figure support that contained temporarily dips, with the corrective action being capped just under 97.50, now reverted to resistance, and if 20 days exponential moving average. I think this was also mentioned in our yesterday's written comments, technical analysis that were released late afternoon with fresh weakness underway, clearing, breaking below 97.00. This is quite important support, as we had the previous low also at 96.96 on the 9th of August, increasing risk of further extension lower as the hourly studies are negative, and the 4-hour indicators are just breaking below their midlines, setting scope for further extension, possible revisit of strong support at the double bottom of 6th and 7th of August at 96.55 zone, as the pair remains in the downtrend of its recent peak at 99.70 posted on 24th of August, with a clear break below 97, and I would say 96.80 to confirm the lower top, and at 98.08 last Friday's peak, and the open way for test of a base at 96.55. Weakening tone on the daily chart as the studies are breaking below their midlines, see risk of further reversal as the pair so far remains in the strong uptrend of let's say end of February's low at 89.29 that peaked at 99.70, but now risk is seen as the recent pullback so far retraced 61.8% of the initial rally from 94.61 to 99.70. Sees risk of further retracement with the break below 96.55 required to confirm an open way for further extension lower, and 95 is seen as the next round figure support ahead of more significant supports at 94.60 and 94.20. And a quick look at the commodities. The crude oil, just to take a look from the Ichimoku studies broke about the cloud, with Ichimoku studies now being well supportive and looking for the further extension higher. Hourly structure remains neutral to slightly negative as the pair the oil price consolidates its recent gains that peaked at 94.69. The current crisis in the Middle East from the fundamental side that is deepening, as well as fears of lower disruption of supply from the North Sea for the Brent crude oil, keep the oil price well supported towards the upside, but growing fears of further slowing down in the world economies, especially the biggest ones such as China and the US as the two top consumers of the oil, crude oil in the world, see the price price gains limited so far. So for now there is a sort of a balance between these two supports and the resistances, let's call them this way, but larger picture is still showing the oil price well in the uptrend after hitting its recent lows at 77.54 and 77.27. Since then the oil price is in steady ascent with the 94.69 seen so far, just ahead of 95 as round figure resistance, and 95.28 Fibonacci 61.8% retracement of the down move from 106.41 to 77.27. Also important resistance, and above this it's at 96.79 200 days moving average, ahead of very significant psychological barrier at $100. Now we'll see which of the two movers of the oil price will be stronger, either the current crisis in the Persian Gulf and Syria, as well as reinforced by lower production in the North Sea, or slowing world economies with today's GDP forecast for the Eurozone showing again further slowdown, will be stronger, and will basically they give a direction, a fresh direction of the oil price. Recall that Saudi oil minister and one of the heads of the OPEC said that OPEC will be very happy and satisfied with the price of oil of $100 to $120 per barrel. This is their ideal level. Also, the OPEC is divided in the two groups, hawks and doves. Hawks are Iran and the South American countries that are looking for $200 approximately per barrel, while the doves are Gulf countries led by Saudi Arabia that are more realistic at this point, and they look for some lower levels around $100 per barrel. That was for all from our side for today. Now it's your turn for the questions. Please, if you have any questions, you can submit them now. Okay, we have the question for the Aussie dollar. I think yesterday we had it again. Let's just take a look. Daily structure is still positive as the rally from 95.79 peaked at 106.12 with the brief corrective action seen so far, but daily studies started slightly to point lower, still seeing just this as a corrective action. 4 hour indicators are now below the midlines with the price currently holding below the 20 days exponential moving average with good support still standing at 105 zone. As long as this level holds, the near-term price action remains quite well supported for possible fresh push higher and the retest. I do apologize. And the retest of asset good support was found at 105.00, and as long as this level holds, possibility of fresh action higher and the retest of 106.12 is still likely. Hourly structure is now turning more positive as indicators started to point higher, and the price bounces of 104.95 fresh low posted late yesterday with the static barrier set 105.70 80 zone seen as the next barrier to be cleared in order to turn the outlook more positive and turn focus towards the 106. I would say any failure under 105.70 would risk further consolidation and further range movements. While the risk increased risk would be seen on loss of 105. This is also approximately 23.8%, 23.6% retracement. That will allow for a stronger correction and possibly to refocus a more significant support double bottom at 104.35, reinforced by 38.2% Fibonacci retracement at 104.44. So holding above 105 still keeps the tone positive, although more negative tone seen on the 4-hour chart still sees risk on the downside and keeps the downside vulnerable, and main risk would be seen on loss of 105 base that will open 104.35. Next very strong support holding above 105 and regain of 105.70-80 levels would be quite supportive. With break above 105.40 that marks 20 days exponential moving average seen as first step. With break here to refocus upper levels at 106, 106.12. Any further questions, please? Okay, if we have no questions for today, and I see that there is no other question, I would like again to thank you all for attending our live sessions. I hope that this is quite helpful for you. You can also ask for any other instrument, anything that is in Windsor's offer, and we have it on our list. You can ask for the analysis. I'll be glad to make it for you on the daily basis. Also to remind you that as from today, our contribution to the fxstreet.com website will be improved by Commodities. So we are adding at the beginning first three actually, gold, silver, and crude oil. So you can find the written analysis for the commodities in the fxstreet.com, and most likely you can find it as they redistribute it. I think in Investopedia and a number of other sites you can find this analysis. In case we don't cover it in our live sessions, you can find it in written also there. Again, thank you all for being with us. Expect to see you back again tomorrow morning at our regular time at 10:00 GMT. Until then, I wish you a nice day and very successful trading. Good luck.